Hey everyone, welcome in to another daily editorial here on the KE Report. Chatting with Craig Hemke, going to be focusing on the precious metals as we always do, and starting off with an end to the month and to Q3 with the gold price at, again, all-time highs. It feels like we've been saying that a lot. We'll also filter down into some of the moves within the stocks, the precious metal stocks. Craig is the founder and editor of TF Metals Report. We'll post a link to his site in the show notes. Craig, just to quickly recap, gold is going to close this month, this quarter, over 2,600, a little under 2,700 as it is down just a little bit today, about $8 on the futures market. Silver's also going to close quite strongly right around 31.50, trading now 31.44. Look, again, we're talking all-time monthly high close, all-time high quarterly close for gold. Craig, does it even matter to people anymore that we keep saying all-time highs for gold month after month and quarter after quarter? Fact of the matter is momentum is still, I think, on gold's side.
It sure is, Corey. And I do think it does matter. It has mattered all year to be printing monthly highs and then quarterly highs. It matters in the idea of getting more and more people's eyes on gold and what it's doing. Yeah, even just this weekend, I saw something with UBS up their price target and said something along the lines of a responsible portfolio should have at least 5% in gold. And I was, what? It's just amazing to hear that because what is it? 90 some odd percent of all financial advisors have less than 5%. I mean, 70% have less than 1%. And so how do you drive demand from not just, you and me and, regular Joes like us, but where the really big money is, the home offices that manage billions of dollars, the institutions that manage hundreds of billions of dollars. How do you get them to want to own gold? Well, you got to have a long-term bullish chart. And that's what you see on the monthly chart and the quarterly chart. And that's what's been going on all year, and that continues to drive demand for gold in all its forms, even in the futures contract. So it is important. Gold making another monthly closing high today as we record, and another, obviously, a new all-time quarterly closing high. And that's, again, you can't understate the significance of that. I will point out, we all think about silver, just pulling your hair out, but if anything, this will be the highest monthly close in silver since January of 2013. It's just really frustrating to say and try to say in an excited tone of voice, but it is. That chart's turned up as well, and that's what we need to see to get more and more money into our sector.
Yeah, Craig, no doubt about it. The strength in the metals has been undeniable. And to your point, even silver has jumped on the train here and putting in a high quarterly close and a high monthly close. So nice to see that, especially after a decade of waiting. But it doesn't feel like it in the sentiment in the space still, Craig, because often, as we've made the point before, the sentiment follows the shares more so than the metal. So undeniable strength in gold and silver. But when you look at the shares, they continue to not respond as much to the upside as people would expect. And they continue to, I guess, get hit a little bit harder on any days there's a pullback in the metals like today. Do you think eventually that the earnings potential that we'll see in both the silver producers and the gold producers is going to be a force to be reckoned with? Because I got to imagine they've done pretty well in Q3.
Yeah, and again, I think it gets to the under-owned argument in the sector that prices get flushed out so quickly on any kind of down day. And, a lot of it is algo driven. We know how much, 70, 80, 90% of New York Stock Exchange volume every day is high frequency trading, algorithm trading. And so the moves of the miners are often exaggerated, just basically on whether or not gold and silver are going up during that 6.5 hour period that the New York Stock Exchange is open. And back on Friday, again today, the metals have been going down while the New York Stock Exchange is open, and that gets these computers to just sell the mining shares. They're not programmed to think as the three of us do and to look at it fundamentally and go, oh my God, look at this. I mean, why would you want to get rid of producer X at this point when we're a month away from them posting what will obviously be record earnings because of the record gold price? But that doesn't get factored into the daily yin and yang of what these computers are doing. So, as individuals, we just need to recognize it is, what it is, and try to use it to our advantage. It's hard to imagine unless the gold price just collapses over the next 30 or 40 days, which who knows, maybe it will. I mean, you get a global liquidity problem and everything, with a bid gets dumped, maybe that happens. But if not, we've just completed this quarter. The average gold price for a producer over the course of the quarter has got to be $2,500 at least. So, high quality producers are booking $1,100 to $1,400 per ounce of just pure profit. And you would think that's the kind of thing you'd want to own. So maybe it's just another chance to buy the dip, use that market inefficiency of what these algos do to your advantage.
Yeah, just interesting to see the low volumes too, though, Craig. How do lower volumes play into the algo trading? Then it seems like other markets are still experiencing higher volumes. Mining sector, still lower volumes. So do algos push it around less or more in the low volume environment?
Oh, for sure it plays in, and it's more. I mean, you think you just have smaller bid and offer stacks, and there's just less money in the sector and in the individual shares or the ETFs. The moves get exaggerated. The price moves get exaggerated. It's like, if you watch the COMEX precious metals futures, during the COMEX hours, roughly, let's call it 8:30 Eastern, 1:30 Eastern, during that 5-hour period every day, that's when all the volume and the trading takes place. And so if somebody comes in with an order to dump 500 contracts of silver, and it happens during COMEX hours, well, there's a lot of people in there trading that were going to be on the bid. And so that order to sell 500 to sell is going to get absorbed reasonably well. But if you come in at 4 p.m, when nobody's, Europe's closed, Asia's not even woken up yet, everybody and, all the New York traders are gone for the day, but the price is still trading, futures still trading on Globex, and you go in and you try to dump 500 contracts of silver, price is going to get reset sharply lower until you find 500 offers. So yeah, for sure, the same thing applies to the stocks. Light volume implies kind of shallow liquidity, and so the moves get the price moves get magnified anytime there's any kind of volatility.
Well, Craig, to that point, I guess what would increase the volume? What would get more people interested? Is there any economic news coming up that you think has people looking to the precious metal sector that would keep it buoyed, but not only keep it buoyed, but maybe keep it going higher? What economic news could drive the sector?
Well, we've got, you first need to have the shares in the sector be a part of the conversation, because currently, again, they're not. Whatever it is, I mentioned earlier, 71%, I think was the number I saw of financial advisors that don't even have 1% of their clients' assets in precious metals or precious metals related investments. And so there needs to be people actually in the sector trading, first of all. And so what impacts, that's the longer term stuff. That's the month of August where the U.S. added $380 billion of debt in just 1 month. It's that long-term understanding that, this freight train is never going to slow down, and all that math is getting exponential. So like that UBS note, maybe we better own some shares. Maybe that's a good place to get some exposure to the gold price as it goes higher. So that's always going to factor in, to whether we can really get people excited. Now, there's going to be news as well on a daily basis. And there's a lot of economic data coming this week. Really, every single day for the rest of this week, we'll have significant data. I think it's tomorrow is the latest update on what they call JOLTS, the job openings and quits. That has been a pretty volatile day every month that's been released so far this year. So as soon as tomorrow, 10 o'clock Eastern, don't be surprised to see the dollar bouncing around, the bond market bouncing around, and gold and silver bouncing with them. And then as you get later in the week, service sector PMIs they always wiggle things. And then, of course, the next jobs report it's always the first Friday of the month, first Friday of October is this coming Friday. So we're going to have a very busy Friday as well. And so that's why it's really easy to look at today's price action and go, this is disappointing. We started with a little bit of head start Sunday night and we wiped all that out. Now we're actually down on the day. Okay. But man, the whole world could look dramatically different by Friday. So I would never want to get too disheartened by one day's action.
Craig, I do want to talk about what we've seen kind of day after day in the markets for especially gold and even silvers. I've noticed the metals being more or less bought throughout the day. If there is a dip, it seems to be earlier on in the day, and the metals prices grind back throughout the day. Now, this doesn't happen every day, but it has happened on a number of occasions over the last really couple months now, and it seems like a change in the markets where usually it was gold and silver getting sold down throughout U.S. trading hours. Now that seems to change. Can you put any factors on this? Have you noticed the same thing?
Well, I got to be honest with you, not as much as you might have seen, Corey. I mean, even just last week, I remember posting a chart to Twitter back on Friday. There were 5 trading days last week, and 4 of them, the price of silver was under pressure all through the COMEX session. The rest of the time, on late afternoon Globex or in Asia overnight or in London, price was rising. And then you get onto the New York side and down it would go. But I do think there's a couple of things, though, that to get to your point, those dips being bought is a function of the kind of the fundamental story, the global demand, especially on the central bank side, that has continued this year at a record pace. And so that has played into it, just this idea of the dips being bought and going along. And then the other part is, too, how many times during the day, again, getting back to this high frequency trading algorithm stuff, how many times during the day is during the COMEX day or the US day, is the price of gold and or silver just a mirror image opposite of what the dollar's doing? Because you see that a lot, especially at news releases. You get an immediate spike or plunge in the dollar index that's commensurate with an immediate spike or plunge, the opposite way in the precious metals. So I might tie some of that back to high frequency trading, and that we've been in a pretty sustained downward move in the dollar since about April, maybe. And so that might be kind of factoring into the perception of how things are going daily during each week.
Well, Craig, we often talk about gold in dollar terms because that's how it's measured on the global scale. And we often look at how the US dollar could affect gold, how interest rates could affect gold, how the Fed could affect gold. But obviously, gold's a global market and it's trading based on what's happening in the East and China and Thailand and Vietnam. And it's trading based on what's happening in Europe. It's trading based on what's happening in South America. Depends on what country you live in. But in almost every currency, gold is up at record highs. It's not just a US dollar thing. Do you think that the global citizens are starting to look at gold as regaining its seat at the safe haven table, and that maybe it's seen as an alternative to fiat currencies? Is that narrative starting to catch on because it's a global phenomenon that it's at all-time highs?
Yeah, it seems to be. Because again, you can look at the In Gold We Trust usually post that chart of gold in every single fiat currency going back to the beginning of the century. And it's definitely a trend where it's going up in every single other fiat currency. And so, I think that's right. I think there is a definite, almost like a cultural phenomenon where gold is treated more as money and an investment rather than just a commodity like we do here in the West, specifically in the US and in Canada. So that is definitely part of the underlying trend. And I think there's a lot going on under the surface from a demand side, physical demand side, whether it's in China or, at the retail level or at the central bank level in so many of the, let's call it the BRICS nations. It is one other thing that's hanging out there that people want to follow as we get into October is this next BRICS meeting. I continue to see, I have no idea. Well, how would I know what they're going to talk about and what the viability is of what they're going to talk about? But boy, I sure continue to see a lot of headlines that one of the things on the agenda is a discussion of beginning to create some type of trading currency, trading unit as they call it even. That will include a go back to SDR that we discussed here in the West. It's a basket of all the fiat currencies. That this would be like a BRICS SDR, that it could have as much as 40% weighted in gold. And if that's the case, these trends of physical demand from the East, if you want to call it that, are only going to continue to grow, if that's kind of a remonetization of gold. So anyway, all these things obviously factor together. And, when you get into frustrating days like today, or, who knows, later this week, maybe the next jobs report is some kind of stellar thing, try to make, look like the economy is doing strong right before the election. Who knows what, is going to come later this week. But I think for precious metals investors, you just got to keep your eye on that bigger picture of where this is all ultimately headed, and take down days, which is kind of a grain of salt.
Yeah, very interesting to see. As we're recording this, we've seen markets and metals really start to sell off here. Who knows where that's going to end up, but something just broke here, Craig, while we were chatting, that has made investors move more into the dollar. We'll dive into that and see what it might be, but interesting to see a slow start to this week, and it is ending the month in the corner. But look, overall, GLD is up 7 out of the last 8 months. That is strong action, continues to hit these all-time highs, which you would think would draw in more investors, but there is clearly some funds that are starting to take part in this rally and continuing to push the price higher. Craig, as always, great chatting with you. Craig Hemke, founder and editor of TF Metals Report. We'll chat with you next week, Craig.